Hello again, John Flynn here from Flynn Real Estate, here once again to give you my honest and professional opinion regarding the 2022 Canadian housing market. This week I have some stats. Not all areas have reported, so I'm going to give you what I got. First, I want to talk about an article from BNN Bloomberg. It was from September 29th and is titled, "Canada's Housing Market Has Never Been More Unaffordable, RBC's Hogue." Buying a home in the Canadian market has never been so unaffordable as surging interest rates continue to drive ownership costs to record high levels, according to Robert Hogue, Assistant Chief Economist at RBC Economics. The Bank of Canada's rate hiking campaign since March has added hundreds of dollars to mortgage payments that come with a home purchase, Hogue said in a report to clients Thursday. So yeah, this guy's obviously not talking to the public. Well, it is a public statement, but he's talking with clients, right? This was not focused towards the consumers. It's focused towards whoever clients he's talking to. Hogue added, "The impact of higher mortgage rates has yet to fully run its course. We expect increases to date, as well as further upcoming Bank of Canada hikes, will intensify upward pressure on ownership costs over the second half of this year." Just like before, when they increased rates, we have a lot of people with rate holds that are still buying homes off of old mortgage rates before this last 75 basis point increase, and maybe before the 1% increase too, right? So they're buying on old rates still, so we haven't seen the full effect of these increases. And they provide a nice little graph here talking about affordability and home ownership costs as percentage of median household income. And again, touched on this last week. So here it is, and they break it down to single, detached, condo, apartment, and of course the aggregate measures. Single detached, it's like 65% of household income, of the median household income. And of course, even the condos are up to 40%. And you see the long-term average is that straight line across the middle. So this just goes to back up what I said last week. Houses in general are way overpriced or just unaffordable, and they're not supported by household incomes. Least affordable markets. We already know most of this, but let's take a look. British Columbia and Ontario top the list for being the most unaffordable markets in Canada, followed by Quebec and Nova Scotia. The report found aggregate affordability hit record high territory in Victoria, 67.6%, Vancouver, 90%, and Toronto, 83% in the second quarter. Smaller markets in Ontario like Hamilton, London, and Windsor also reached their worst affordability levels ever based on the ratio of mortgage carrying costs to household income. Pretty significant, something that we already know, but it's been quantified here in this report. And there's some good news on the horizon. He thinks prices will continue to soften until they reach a bottom in the spring next year, adding that ownership costs will fall once the Bank of Canada stabilizes interest rates. So this guy's calling for the bottom in the spring of 2023, it looks like. Interesting. Mine's about a year past that at this point, and it's tentative, right, based on other factors, but it's obviously not this year, right? Our view is unaffordability will peak at the end of this year, though the timing is poised to vary market by market, Hogue said. Growing household income will partly drive the improvement that will follow. It will likely take years to fully reverse the tremendous deterioration that took place since 2021. So one line that really stuck out to me in this report or in this press conference or whatever it was our view is unaffordability will peak at the end of this year. Interest rates aren't going to go down at the end of this year. Obviously, they're going to go up before the end of the year, but it's going to peak. So after that, it's going to get more affordable. The reason it's going to get more affordable, in my opinion, is not because interest rates are going to drop right after, because they're not. They're probably going to keep interest rates high for a few months at least. It's because prices will continue to decline, as he said in the paragraph, I think, above that. Yeah, he did. He said they will reach the bottom in the spring. It's a pretty interesting article. One of the ones that caught my attention. I read a lot of news, and a lot of it's fluff, but I like that one. So yeah, on to some statistics. First area is Calgary. Calgary, demand shifting to more affordable options. City of Calgary, October 3rd, 2022. This is for September sales. Strong sales for condominium, apartment, and row properties was not enough to offset declines reported for other property types. This caused city sales to ease by nearly 12% compared to last year. While demand is easing, especially for higher priced detached and semi-detached product, purchasers are still active in the affordable segments of the market, cushioning much of the impact on sales, said Calgary Real Estate Board Chief Economist Anne-Marie Lurie. At the same time, we are seeing new listings ease, preventing the market from becoming oversupplied and supporting more balanced conditions. That is what it is. Let's check out the data. So here's the City of Calgary total months of inventory. Yeah, you can see that it's still pretty low, but it's maintaining at 2 months of supply below the national average, but it looks like it's going to trend up at some point. Here's the inventory, of course the benchmark in the red. Sales are down significantly. It looks like they've declined every month since March, and the inventory is down. It went up during the summer, during the late spring summer, but of course it's down a little bit, but it's not at all-time lows. It's just not at ideal levels. And the average prices, they had a 2.9 increase in the average sale price month over month from August to September. So they went from $485 back up to $499, still down 7.2% from the February peak. But yeah, they had a good month, looks like. And I saw many places did have a good month, but we'll get into that further now in a second. Okay, now on to Ontario. Everything surrounding GTA. GTA didn't have their stats, or Toronto Real Estate Board didn't have their stats ready, so we'll touch on those in a future video. But here is everything surrounding, or almost everything surrounding that area. Starting with, I guess, the good news for sellers. And sellers, take note, you might want to put your house on the market if you've been thinking about it. We had a 0.7% month-over-month increase for September. That equates to a $5,000 increase. Not much, but it is something. I think I said in a previous video, I'll see if I have the graph here from when I did my projected trend line. We did trend sideways prior to the big peak, and you can see on this graph, and I think that we're going to do a little bit of sideways trending, or very little price movement after the peak now for the next month or two. But it will continue down at some point, but right now it's trending sideways. We're still down 22.2% from the February peak. So again, this was the positive stat. If you are a seller, you might want to consider listing your property. And again, I'm not talking about your primary residence, I'm talking about any investment property that you may be interested in selling and capitalizing on the market. The market's still up a lot compared to previous years, so take note. Number of homes for sale, inventory. So you can see in August we did have a decline, but now it's gone back up. So the inventory is a number of homes for sale, which is inventory, is going to continue to rise at some point. But yeah, it's not on the decline. Months of supply, same as inventory. You can see it's almost at 3 months now. Once we get over 4, it's more of a balanced or more normal levels. Number of sales. Sales did decrease again in September from the month before. Very low levels. They're winter levels. So yeah, sales are still down. And the percentage of the sale price to the last original list price, and it's down closer to 95%. I don't know how much lower it can go. It might hit 93, but this is something that usually doesn't hit in the 80s, but you never know. But again, that's pretty rare, even in the worst markets, that it'll hit that low. And average days on market continues to climb. It takes longer and longer to sell your home. We're up to 33 days, 32, 33 days right now in Ontario. So that will probably continue to climb up over 40 to 50 at some point, maybe longer. But you can clearly see it's headed straight up after what I like to call a double bottom, or what the stock market analysts call a double bottom. Okay, I'm going to throw in a couple of places. I think I had requests for these. I don't have much data on them. This data is from August, because CREA hasn't released their stats for Canada or any of these provinces yet. But since the rest of the data I don't have for the provinces or areas and cities I usually touch on, let's see what's going on in these places. Prince Edward Island. As reported from CREA, MLS home sales in Prince Edward Island below average for the month of August. The number of homes sold through the MLS system of the Prince Edward Island Real Estate Association totaled 196 units in August 2022. This was a decline of 13.7% and was the lowest sales total for the month of August since 2015. So since 2015, that's a big number. So it's a long time. 7 years, lowest number of sales in August since 2015. Pretty significant. And of course, PEI has been faring very well compared to the rest of the country, but they're one of the provinces that lag behind. It's a smaller province, and of course, they tend to lag behind the bigger cities and the bigger provinces. And I'm usually don't touch on these provinces, not because I don't care about them or I think they're insignificant. It's because the data, they don't have a lot of data to support the macro trends in the country. So it's hard to have a representative sample from these provinces because every month could be significantly different based on just a few sales. And of course, here is the average price. It looked like it peaked somewhere in the middle of the year. It looks like it's trending down now. The rest of the months this year we're over 400 or close to 400, and now we're getting into the 375s. So yeah, it looks like Prince Edward Island's finally starting to follow the rest of the country. It'll be interesting to see what the September numbers show. And lastly, New Brunswick, another province I've never touched on yet in my videos. MLS home sales in New Brunswick real estate boards continue to moderate. And looking at the average prices, yeah, you can see they've come down significantly from low threes to mid 200s, or just over, let's say mid to high 200s. So of course we're seeing it in New Brunswick too. Interesting stats again today. We've had, I think we're having that, it's not really a rally from the buyers, but a lot of the buyers that are trying to get those 90, 120-day rate holds, they're buying their homes, they're getting them at a little bit lower rates, so it's been a positive sign in the market. A $5,000 increase in Ontario really isn't much. And for buyers, I still maintain my advice to all buyers that, this is not the bottom. If you want to capitalize on the market, wait it out, wait till the interest rates are lower, and the prices are going to most likely be lower at the same time. And again, you can look, I will revisit my home buying equation, or whatever you want to call it, recipe at some point, once I get more data, maybe later in this month. But I'm pretty confident that it's the same situation, probably a couple years out for that buying opportunity, for peak buying opportunity. As for the sellers, if you're in a position as a seller where you think, should I sell now or should I wait until it goes back up? And again, I hear this all the time, it's going to go back up next year, whereas even the RBC economist there said it's going to bottom next year. Who knows when he didn't say when it will go back up. He just said it will bottom most likely next year. I think he's off by a year, but whatever. I think this is your opportunity. We're going to trade maybe sideways at best. If not, it will keep declining. I think we're going to see small declines, but whatever. Best case scenario for sellers, we're going to trade sideways with the numbers. And this is your opportunity in the next month. Once you hit November, December, historically, they're bad months for selling. So you have about a month to sell your property, maybe 45 days if you want to capitalize. After this, I think it's going to be years before you're going to be able to achieve the current price levels, like years. So I think you should think long and hard. Do you need to sell? If not, that's great. If you do need to sell, are you expecting the prices to go back up? Because if you are, I think you're going to be let down next year when they don't go up. And if you're expecting them to go back up, ask yourself or ask your realtor, whoever it is, can you provide data or some sort of statistics to prove that point, instead of just, well, they're going to go back up next year. Like, that's not a good reason. And a lot of people I talk to, they don't have, actually anyone I talk to that says they're going to go up in the spring, they're just saying it because it sounds good. They have no data to back it up. They have no reasons. Think long and hard. Now's your opportunity. It's probably your last opportunity for a while to sell that extra property or whatever the case may be, to get out of the market. And yeah, you're not going to make as much as you thought because you missed the peak, but it's going to be a lot worse if you wait longer. Thanks again for watching. Until next week, I'll see you then.